We get this fabulous Pfizer news, and it's great news, and this is what we get, this flattish kind of nothing open. It seems disappointing unless you understand the concept of sell on the news, because that's exactly what's going on. This is a classic Wall Street play here. Just take a look at the sectors right now, and you can see modest upside in some of the energy stocks and healthcare and banks, but it's, it's consumer staples, tech's lagging, semis are, for the most part, flat to slightly down. This is a pretty flattish open. If you look at the down movers, same situation, a little bit of move on the energy stocks. Amex is up, but Visa's kind of down. The industrials are down. Most of the consumer names like Walmart's down. Tech, Apple's up, but Microsoft's flattish here. This is flat here, and that's because we had the sell on the news. So Pfizer came out around 6:45 a.m. Let me show you the S&P futures here. We rose about 20 points immediately, 46.90 to, 20 points or so. To 47.10 or so. And then look, immediately right down. You see that spike up and down? That's sell on the news. Knee-jack, buy, everybody realized, oh, we already knew that. That's what sell on the news is, because the markets had been working under the theory that Omicron was manageable. This word manageable, everybody started using since Fauci was talking over the weekend. Oh, it's manageable. What does that mean? If it's manageable, then peak supply chain and inflation worries are now here with us. This is the peak, and it will peak over the next few months. It means that margin erosion worries will not be with us through entire 2022. We're going to worry about the whole thing falling apart. They'll hold up. It also means that there's going to be less fear of the Fed being more aggressive to combat higher inflation, which is what they were saying earlier. So this is all a series of implications about this. The key to the strength of the market is the strong economy. That's really what matters here, because everyone knows the Fed aggressively raising rates is the great killer of bull markets. But there's usually another component. Usually we're going into a weak economy, not a strong economy. So the Fed raising rates plus a recession, that's the great killer of all bull markets. Every professional trader knows that. But wait a minute, that's not what we've got. We do not have any recession coming. In fact, we have the opposite of a recession. We have the consumer stronger than they have been in many, many years. That's why the market's holding up, because the bulls keep saying we can hold up on the strong economy even with the Fed raising heights. That's the raising rates. That's the key. So the Fed raising rates is not great, but we're 25 basis points right now on the Fed funds rate. If we go to 50, 75, or even as some might say 3 times next year to 100 basis points, that's aggressive, but that's still low. And when you've got the economy with this kind of strength, that's what's important. The S&P is trading for 21 times 2022 estimates. That is high. We would be nowhere near that. We would be way lower. The market would be way lower. We'd be 25% lower on the S&P if there was any signs we were going into any kind of recession. That's the key. So, Carl, the key now, it's going to, if we continue to get data along the lines of Pfizer, the story is going to switch very quickly from Omicron to what is the strength of the U.S. consumer in 2022. Right now, it's terrific, but by January, if that data holds up for Pfizer, that's where the story is going to be. What's the consumer going to be like in 2022? Carl, back to you.
Thanks.